Hi, this is Stuart Cooper with your mortgage market update for the week of October 7th, 2022. And we had a really good little rally for the last few days, and that rally is pretty much puttering out. And I do believe that we're going to see an increase in interest rates in the foreseeable future, especially for the month of October. So I'm going to kind of get into that, what's going on with mortgage-backed securities, the 10-year Treasury, and also inform you on why I think rates are going up. And then we're going to look at my 10-year Treasury graph to take a look at it, and I can show you exactly why I think rates are going to continue to climb for the foreseeable future. So this morning, the non-farm payroll came out, and it was anticipated to be at 250,000 new jobs created, and it was actually 263,000, which doesn't sound like that much of a miss, but it was a big enough miss that it basically spooked Wall Street that inflation is still kind of out of control. But it's kind of funny if you think about it. If we went back a few months, normal payrolls are about 400,000. So we're really dropping off on what the expectations was. So 263, 250 versus 263. So it was what, 13,000 off, and it spooked the whole market, which is kind of crazy. I know the stock market was off a few hundred points earlier, and the bond market is definitely reacting to it because now, there's a really good chance based on this information that the economy is not cooling down quick enough. So the Fed's most likely going to be raising interest rates, and that's why this is happening. It's because that the Fed is going to probably raise rates another 3/4 of a point in the next month or so. So that's the one issue. The other issue that's kind of causing things is oil. When OPEC decided the other day to basically reduce oil supply by 2 million barrels a day, that's going to cause oil prices to basically surge, which is going to cause higher rates, which means higher rates means higher costs, higher inflation. So that's also rolling into it. So it's kind of like the perfect storm. Okay, so let's take a look at the 10-year Treasury, right? So this is the last 6 months. So you can see back in August 1st, we had this trend of rising interest rates, right? And for those of you that have watched some of my previous videos, I talk about channels a lot and where rates are going. And what you can see is there's a very narrow range or channel where rates are going up, and this is going to continue. So here's the channel right here, right? And then here's the last couple of days. We had kind of a nice little move where rates got a little bit better for a few days, but this is actually temporary. What I want to point out is this is where we look for windows of opportunity to lock, but we're going to most likely make its way back into this channel. And the big problem right here is there was nothing to stop this drop, and there's nothing to stop it from rising. So there's nothing to slow us down. So I do expect us to hit 4% relatively soon, probably in the next couple of days. So that's my projection, is I think we're going to be up here for a little bit. And then I think what we might get is what they call a little bit of sideways trading, where we might just kind of stay there for a little bit. But I think the momentum is that rates are going to continue to increase for October. All right, so you know what? Let's just change gears on a few things real quickly. Let's talk about current interest rates, right? Because there's a big, huge spread between conforming rates and what they call portfolio pricing or jumbo rates. So the Fannie Mae, Freddie Mac rates are conforming, and it varies from county to county in the United States. So I'm not really going to go in it because there's a lot of differences. But let's just say anything over $1 million is considered jumbo. I know that's not accurate. It's actually a little less than that. But let's just say, for intents and purposes, a conforming rate right now is around 6.625 at a 3/4 point cost with an APR about 6.752. So considerably high, close to 7%. Let's just say 7%, right? But the jumbo money, so the example on a jumbo money, $1 million loan was around 5.5% today at a 5/8 cost of an APR about 5.585. So that's about a point difference in rate between conforming and jumbo. So when you hear lenders talking about pricing, a lot of times they're talking about conforming rates, and that's where you hear that number. Oh, rates are getting into the 7%, and that's absolutely true. But the jumbo money is in the fives with at least the key jumbo lenders like the big banks. And what I mean by big banks, I'm talking like, the brick and mortar kind of companies, Bank of America, Wells Fargo, Chase, Citibank. All the big banks are probably going to have better pricing because they're not really having to sell the loans to the secondary market. Because if they're selling the loans to the secondary market, then rates are probably going to be higher because the investors are demanding a higher rate of return due to the high inflation. All right, so with that said, that's where my recap is. I do believe rates are going to continue to climb. We do look for windows of opportunity. That's why it's really important to look at fixed rates versus adjustable rates and compare the different options depending on how long you're going to keep that property. And that way you're going to save a lot of money. I hope you like this information. If you do, please subscribe to my channel. I'd love to show you secrets and telling you how to save money, especially when rates are rising. Because you know what? In the reality of things, this is just another day in the market, and things will be okay. And we're just going to a normal market. All right. So I hope you guys have a great weekend, and I'll talk to you soon. Thank you.